Welcome to weekly view on markets. Nifty has gone up by 1.2% for this week. Mid cap and small cap indices have outperformed by posting a gain of around 2.5% each. GST reforms were key trigger for the markets to stage the rally during this week. FIIs have reduced their selling during this week. DIIs continue to buy and provide support to the markets. GST collections for the month of August is robust at 1.86 lakh crores. Purchasing Managers Index, that is PMI index, for the month of August comes at 63.2, indicating a strong growth in the economy. Despite Trump tariff threats, economy is expected to grow and GDP is not likely to be affected in a big way by Trump tariff. Charts indicate that markets are expected to be range bound for some more time. Lower GST rates and lower interest rates by RBI will improve consumption and boost GDP growth in the economy. The impact of these policies will take around 1 or 2 more quarters. Investors need to be patient. Nifty closed at 24,741 with a gain of 314 points, that is 1.2%. Bank Nifty closed at 54,114 with a gain of 458 points, that is 0.86%. Mid Cap Index closed with a gain of 2.42% at 57,075. Small Cap Index also posted a gain of 2.49% and closed at 17,655. So mid cap and small cap indices have outperformed in the market during this week. India VIX is steady at around 10.78. Most of the sectors have gained during this week, except information technology sector, which lost around 1.55%. Metals gained around 5.75%. Auto sector gained about 5.45%. Consumer durables, manufacturing, commodities, public sector companies all gained between 2 to 3%. PSU banks, oil and gas, NBFCs, private banks all gained between 1 to 2%. Healthcare, infrastructure, pharma, media sector all gained between 0.5 to 1%. So there was all around buying in all sectors and more stocks were advancing and the number of stocks declining during this week. Now let us look at technical charts. This is the daily chart of Nifty index. As we can see on the chart, it is in a broad range. Lower side it is 24,300 and on the higher side it is 25,500. So market is likely to continue in this broad range for some more time. We see that whenever it is going around 25,200 or 25,300, we see selling in the market. And whenever it is coming to the lower level, we see buying. So market is likely to continue consolidation in the broader range. This is the stock of Nifty Mid Cap Index. Here also we see after coming to a lower level of 55,800, Nifty Mid Cap Index has gone up. Now again it, it is showing in the mid of this range, which is shown by the two lines. So it is likely to continue to consolidate in this broad range. This is a chart of Nifty small cap index. Small cap index is also in the broad range, 19,000 on the higher side and 17,500 on the lower side. It came to around 17,600 level. From there, it has picked up and likely to continue in the broad range. This is a chart of Bank Nifty index. Bank Nifty index also, after hitting a low of 53,700, it has slightly pulled back, and the candles, last two, three candles show that it is likely to consolidate in the range of 55,800 on the higher side and 53,500 on the lower side. Till there is some clarity about the earnings of the companies, the markets will be range bound. We will see some days of upside and some days of downside. But overall, there will not be major movement in the market. It will continue to consolidate. Now let us look at some of the macroeconomic fundamentals. India's macroeconomic fundamentals continue to be quite good. RBI forex reserves is at 694.23 billion US dollars. It has gone up by 3.51 billion US dollars during this week. Foreign exchange rate is at 88.19 rupees for $1, and dollar index is at 98.1. Rupee has weakened against dollar in the recent times, but if we see, rupee is quite stable against all other currencies. So the weakness is only against the dollar. It has to do with more of global scenario than the domestic one. The dollar demand is higher, because of which all currencies are depreciating. Along with that, rupee has also depreciated. When crude price is at $65.5 per barrel, gold price has touched all-time high. It is at 1,08,490 for 10 grams 24 carat. FIIs have sold 5,666 crore during this week, and DIIs have bought 13,444 crore in equity during this week. So continued DII buying at lower levels is supporting the markets. It is not allowing markets to fall in a big way despite continued FII selling. But FIIs have sold lesser quantity during this week. And with the GST reforms and after rate cut by RBI, it is expected that FIIs may start buying in coming weeks. PMI index for the month of August has come at 63.2. So this is a quite good number, which indicates good growth in the economy. GST rate rationalization and reduction in the slab rates is positive for the markets. These lower GDP rates for most of the consumable commodities by common people is likely to boost consumption, and it is likely to boost demand for consumer durable goods. And with that, the economy is set to expand, and we'll see growth and private investments also coming into the economy. When the private investment picks up, it will give boost to the economy and to the GDP growth. But these all will take 1 to 2 quarters, and investors have to have patience and wait. Commerce Minister has stated that trade treaty with US is likely to be concluded before the end of December 2025. Despite Trump tariffs, there are backdoor channels negotiations that is going on, and Commerce Minister is confident that India will sign a trade treaty with US before December. So this is a quite good news. While short-term view is clouded with many global developments, long-term prospects for Indian economy and for the markets remains good. Investors have to have patience. Mutual fund investors should continue their SIPs. They should hold on to their investments. I'm quite sure in next 1 to 2 years time, the markets will see higher levels and investors will get good returns. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We'll meet again next week. Thank you.